Hey everybody, it's Pete. Good morning. Happy Monday. Welcome to Stock Trading Pro. Today's Stock Market Live, we're going to talk about Square stock and the rally that both I keep calling it Square, SQ stock, which is actually block stock, and the $50 rally that stock had last week. We're going to take a look at a lot of the large cap tech stocks from last week that had a massive rally and ask the question, will energy stocks catch a bid again today? Will financial stocks hold the bid today? And obviously, the large cap tech stocks that we just talked about, will they maintain the buying pressure that they had last week? Or was it just a stock market rally, which was a relief rally off of the Fed announcement? And now that the uncertainty is out of the market, which stocks are the best stocks to buy now? Putting all of that into the equation, we're also going to talk about a book today that we get a lot of questions about what's on the bookshelf in the back, which ones would help the most. So every day I try and pick something out that I think that whether you're looking at the stock market for investing, whether you're looking at the stock market for trading, or simply looking for the best stocks to buy now for during the week, this actually is not a stock trading book, but it is absolutely 100% a book that will help you make better, faster decisions where you have absolutely, positively no doubt that you're making the right decision. And it's one that's going to remove all emotions from your trading. So we have a lot to discuss today. We're going to break down the S&P futures, which are just slightly positive right now, and the sector rotation for the week, which is actually pretty interesting as well. So we're going to answer the question right now, which are the best stocks to buy now, and how does the week look going forward? We're going to do a very short recap on last week and how that's going to play into this week's trading. The big challenge we have is longer-term bearish order flow with a strong stock market rally of bullish order flow last week. And now it wasn't the easiest day to game plan heading into the week. But, and here's the thing, you still need to game plan because when it's not obvious, super obvious anyway, you still need to script out what you plan to do before you buy any stock, because then that makes it a lot more business-like, which I think is probably what all of us want, is we want our business, our trading business, to show consistent, predictable profits. And that only can happen if you game plan only what you're looking for. So we have a ton of stuff to talk about today. Stick around, be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. I want you to know how much I appreciate it. I just can't say strongly enough about last week was amazing. Plenty of price action last week. So we're actually going to jump right into Square stock. Then we're going to jump into this book, and then we're going to go back into the market and look at the sector rotation because Square had a pretty massive rally. And I want to point something out that we talked about probably about a month ago. I believe it was February 14th, if you want to go back into the YouTube. I actually posted the video that I'm about to talk about in the description below if you want to watch the video after this stock market live. So we're actually going to get into, you can see the futures right now kind of dancing right around positive. And you know what? That's actually a big question that we get. Hey, Minvai, good morning, pal. What's going on? Dustin, good questions this morning in the boot camp, Dustin. One of the biggest questions that we get is, what is the sequence that before the stock market opens? What's the sequence of things that you normally do to run through kind of your progression to get an idea of where the market's going to open today? So again, one of the toughest questions we have is, how do I know the stock market opens and everything's flying all over the place? Everything is really chaotic. You know, it's volatile and stock prices are moving all over the place. A lot of people say to step back and wait for the dust to settle before you start to buy your stocks. I don't do that. I actually, now again, I'm not saying I jump in at 9:31 as soon as the stock market opens. However, one of the biggest things that is critical to success is knowing what you expect. And now here's the thing. We get a lot of people that come back and say, well, but what if I lose money? Or what if, here's actually a better way to word it. What if the stocks I plan to buy now don't do what I expect when the stock market opens? That's fine. What if you have 5 stocks and only one does exactly what you thought it would do? Now think about that. 80% of the stocks that you game planned and what you plan to say, okay, and I'm specifically talking about day trading right now, not necessarily day trading, swing trading stocks. But let's say that you go into the day with 5 stocks, you script out your game plan, we give you the template, you write exactly what it's supposed to look like, and only one out of those 5 stocks opens exactly the way you thought it was going to, does exactly what you mapped out, scripted out for the first 90 minutes of the day. Only one out of the 5. Now, here's the challenge. We get a lot of people be like, yeah, but Pete, 4 out of 5 didn't do what I thought it was going to do. 80% didn't do what I was going to do. Who cares? Trade the heck out of the one that did exactly and make money on the open. Best case scenario, 2 or 3 out of the 5. Now you have to pick the best one that's doing exactly what you thought. That's trading and thinking at higher levels. Do not be a victim of the market. Script out what you expect. I'm willing to bet, and I don't bet because I trade full time. That's enough for me. I am willing to bet that you are a lot smarter than you're giving yourself credit for. You just have to trust that you put in the work. If you put in the work, put in the work and follow the plan that you scripted out. But I'm telling you, it's that mindset shift of focus on the ones that are working out or are doing what you game plan for, and then let the probabilities play themselves out, which kind of takes us into Square stocks. So we're actually going to make our way over into Square right now. And I'll go through the progression in a second. So I keep calling it Square stock. It's actually block stock now. And obviously this $50 rally, which you can see much cleaner on the hourly chart last week. Now, you can definitely say, and there's not a question about this, you can definitely say, well, everything rallied last week. Of course, this one did. That's not the point. Some stocks rallied last week. This stock had a $50 rally, went from $92.50 to $142.50 in basically 4 days. You're talking about the 15th through the 18th. Okay, basically four trading days. Now, one of the conversations that we've had over the weekend, and specifically yesterday on our swing trade coaching session and game plan session, which we have every Sunday morning at 11 o'clock, it was somebody saying that it can't be as uncomplicated as we make it. So in other words, they're seeing results, they're seeing positive P&L in their account, and they're kind of waiting for the other foot to drop to say, it can't be that easy. It can't be all we're supposed to look for. And this is the challenge that a lot of traders have. Now, I think every single person on this call right now can look at this and say, this stock just had a big double bottom over here. And that's where buyers came in right in the $93 area. Anybody on this call who knows basic technical analysis can do that right now. Not even a question. That's not the question. The question is, can you look at the stock and think about putting on a trade and say, okay, this trade makes sense. If what I'm looking at and buyers step back in at the same price as they did the last time, then I have a risk management spot to justify putting on that trade. So you are now saying to yourself, okay, that $93 is where buyers did something significant last time in SQ. If they come back, I am going to look to initiate a trade, but I'm going to take it one step further. You might not have watched this video. Again, if you want to watch the full replay, the link is in the description. It's a YouTube video. I want to show you what we talked about and why this stock, out of all of the stocks, had such a massive percentage move over this time. And this is kind of an advanced thing, but it's called accumulation. This is where smart money is buying stock kind of as it's still going down. Then it starts to go sideways, and we see an expansion in volume, but we don't yet see an advancement in price. And I'm going to tell you why that happens in a second. So if you take a look over here on the daily chart, right in this window, this pocket of opportunity over here. Let me actually throw volume on the chart. For some reason it vanished. Don't know why. We'll take a look over here, and you can see over here the dramatic increase in volume during this pause. We called that out roughly about a month ago. And what I want to talk to you about SQ stock right now and why that's so significant, we actually put on the YouTube's title that it was a rare buying pattern that you need to learn. So I want to explain to you why this happens. We spend a lot of time on these videos talking about smart money concepts and what that means. If you can visualize a stock has bearish order flow like SQ stock did, and it's going down, stock market's going down, the stock is going down. If I am looking to buy the stock, so let's actually say, hey, Will Smith. Will Smith, good morning. How's Jada? Let's say Will has a hedge fund and he sees the stocks going down, and all of Will's research analysts say that, wow, if SQ stock gets somewhere around $100, that's a pretty interesting price based on their cash flow going forward. So we might want to start accumulating a position on the way down because we believe it's going to pop after that, or at that price, it looks good. Discounted cash flow at that price going forward. So they start buying on the way down, and they're doing what's called sitting on the bid. They are basically buying at the best price as it's going down, knowing that they're looking for somewhere in that $100 area. And I'm using 100 as an example. As it's going down, the selling is still heavy because the bearish order flow, everybody's recognizing it. Now you can see that here during these pushes and pauses to the downside, but you can actually see where, and again, this reversal pattern on heavy volume was actually the first signal, which actually that's something else I want to bring out to you because it's so common for hardworking stock traders to miss the best price, to miss the best opportunity to buy the best stocks now because they're seeing it in the headlines maybe a week later, 2 weeks later, and like, oh man, this thing was $92 and I missed it. Now it's 140 something. Why didn't I see it sooner? I'm going to give you a little bit of a suggestion of how to be better prepared. And I'm going to walk you over to FinViz Stock Screener right now and show you the scan that I run. And actually, you know what? I'll post the link in here just to give you an idea of, so you can save the link. Now, what I'm going to show you is FinViz Elite, but the same exact thing works. You click on it. If you don't have Elite, Elite is $35 a month or something like that. And it just means you can get real quotes and it gets rid of the ads. So the link I'm about to give you, don't worry that it's the paid version. You can still do the same thing with the free version of FinViz Screener. So the point that I'm making is specific to this one candle. And that's the point that I want to get across here. And it's this candle right here. Okay. This one right here. We're pushing down, pushing down, pushing down. We break down here and volume spikes dramatically. More volume than any point in this entire push down, quite honestly. So just think about this. Pushing down from November through the first week in January. So let's take a look at that again in Square, SQ stock, block stock. Right here, this one candlestick. Now you're going to be saying to yourself, it can't be that simple that one candle reverses the entire move. You're right, it's not. But you need to be aware of when the tape changes and when the tape is still valid. So when we're talking about the tape, we're talking about the buying and selling pressure. Buying and selling pressure is recorded on the tape, and that's why we strongly suggest you watch price action and volume and put them together to make a decision. So just that one day mattered to me because it came up in my scan. I sat up in my seat and I was like, whoa, okay, put that down in the tracking journal to pay attention to see if that one candle after this bearish order flow with expanded volume matters. That one candlestick reversal, we call that a bullish U-turn. Some people call it a key reversal, had more volume in that one day than all of the days individually in that entire bearish order flow. That has to mean something. But the question on your mind has to be, well, how do I find that? That's what we're going to talk about right now. So I want to point this out, and then we're going to take a look at the scan. So this is the move down I'm talking about. And this right here, look at this 1 day of reversal volume compared to all of the volume in this move down. That 1 day was the biggest move down. We're going to get to this in a second. We're going to go over to the screener in FinViz. So again, FinViz is a very, very good stock screener. It is incredibly affordable. You could actually get the free version with just an email. I'm not selling it. I'm just telling you I use it every day. What I'm going to show you now is how I spotted and put SQ stock in my game plan because of just 1 day. This is pretty powerful, okay? So we're going to go over to FinViz, and you'll see that I actually have some preset saves. Now, this is the one that I want you to take a look at right here, which is SQ. So I'm actually going to zoom this in a little bit so you can see it. Now, the minimum criteria I have, I don't trade stocks under $10. I don't trade penny stocks. I don't trade OTC stocks. So I started at over $10. Average true range, you can see right there what that means. It's the high to low over the 14-day period. That's what most software defaults to. Average true volume of 2 million. Only stocks. I'm not looking at ETFs. And now I'm also looking at relative volume over 2. Now, something I want to point out, which is very, very important. Last Friday in the stock market was options expiration. So normally on a typical day, when we run this double volume scan, double normal volume scan with that criteria, which is average true range of at least $1.50. So that's average volatility from low to the high, and 2 million shares on average, which to me means that it's most likely a market leading stock and has smart money attention on a regular basis. In trading terms, that means it has liquidity, Liquidity means I could get in and out with size relatively easy, unless the stock is flying somewhere. Even then, I'll use a stop limit order instead of a market order because of that liquidity. So volatility is the average true range. That's opportunity. And then liquidity means that we can get in and out reasonably where we want to. And I think more importantly is that when a stock has reliable liquidity and reliable volatility, those are the stocks that can become your personal ATM that should go into your daily watch list, because they have action and liquidity on most days, especially if the market's moving. You read the market, you read the stocks, and pretty much you can trade with a little bit more conviction, because market stocks tend to move with the market. You just need to know which stocks are market stocks. So on a normal day, when we run the 2 times volatility scan, and I'll give you this link right now because you can pull it up on FinViz. I'll post this in here right now. Okay. So basically, a normal day will see anywhere from 8 to 15 stocks that meet that criteria. Because of options expiration on Friday, volume is always expanded on that day. So the number heading into today is 88 stocks. So I just want to give you some context that that's not a normal reading. That's the kind of reading on double normal volume where it expands because option contracts are expiring and a lot of people are unwinding positions. So Friday's number was a much bigger one. On tomorrow's Stock Market Live, we'll run the same exact screen, and I'm willing to bet it'll probably be 70% less than that 88 number, and then we'll take a look and see what that means. Taking this a step further, so we see the charts, right? We're looking at the charts, and we understand that the double normal volume is something that we're going to be looking for. So you can see that these charts, some of them are in downtrend, some of them are stuck at that level, some of them are right at a level where they're almost ready to break out. So this one is actually happening, FUTU, while it's going sideways. There's a couple of different things to be considering on the double normal volume. If you're a regular viewer of the channel, if you're a subscriber, you know that we discussed this last week, and it was a big part of last week's conversation simply because of the way the market was rallying. And look, if you're not a regular viewer of the channel, please do me a favor. If you want to get updates, make sure you hit that subscribe button. And especially if we're providing some value for you, make sure you hit that thumbs up button as well. Here's the thing that I want you to write down. And again, we always talk about post-it pad moments. These are the things that matter. It's the small distinctions in the market that make a big change in your P&L over time. This is what you want to write down. You've heard us probably say often, pushes and pauses. It's during the push that we want to see heavy volume. That's validating the order flow, especially the bullish order flow and pointing up. And then during the pause, that's where we manage risk. So we make money during the push. We manage risk during the pause. We want to see light volume pauses for 1 day to 5 days before the next swing trade price action moves in that favor. Here's the thing you want to write down. Heavy volume pauses typically lead to reversals. So that's what we actually saw in SQ stock in the chart that we just looked over here. This 1 day alerted me to it. And then you could see over time, it kept getting heavier and heavier volume. Look at the volume line here compared to the volume. Let me put in a vertical line here so it's kind of easy to see right here. So this is where the down move started. So if you could take a look at this 1 day and how volume reacted since then versus all of the volume from the start of this move to the downside. These are the kind of things, obviously we're talking about SQ stock right now, block stock. I keep calling it Square. These are the little things that will completely change the way you see the stock market. When you go out there and choose the best stocks to buy now, you're starting to put the pieces together, as opposed to just saying, I read something on Reddit last night, or I read some chatter in a forum or something like that. You don't want to do that. You want to make yourself the reason you make money. You want to learn to put the pieces together of the market like this, because the first part of this equation is running the scan. And I say this all the time, and please take this to heart. Trading is the easy part. It's being prepared. That's the hard work. It's doing it in after hours. It's doing it on the weekend. It's pouring a cup of coffee and saying, I'm going to lock myself in my trading office for 30 minutes to an hour and say, I need to get this prep work done so that before the market opens, I know exactly what I plan to do because I put in the work. And that's where trading conviction comes from. So I'm building all this up because just that 1 day put that stock, SQ, into my tracking journal to say, pay attention to this one reversal day. And if that one reversal day leads to accumulation, so down move, one big day of volume makes it go sideways, the selling kind of stops, volume increases, which tells us that is accumulation. Then we step back and say, okay, now we're going to look for the buyers. Again, we talked about Will Smith's hedge fund there before. Will Smith's hedge funds, all of a sudden, I like it at that price, but now it stopped going down because of his buying or her buying, whoever it happens to be. If they still want more stock, if they still need to buy stock now, they need to now start paying higher prices. And this is something that I want to point out to you, which is critical to understanding. For hedge funds, for large institutions, for the smart money who has done their work and they're looking for the next big move in the stock, it's more important that they get on the full position than it is that they get the perfect price. And think about this in your own trading. If that's how smart money builds positions within a window in exchange for that next big move, they're not trying to get the exact price. They're trying to work the position in a window for the next move that they believe is coming. How do you do it? If you're like most people who just start out trading, you put all this massive pressure on yourself to get the exact price, and you are demanding that price reverse as soon as you put it on because you did the work and you saw the signal. If smart money doesn't build positions in that way, why in the world would we? It just doesn't make any sense. One other thing that I want to point out is I mentioned this book, and I want to bring this up in a way because this is more of a personal achievement, self-development book, but it's really, really applicable for trading. If you've never seen this book, and I want to give context to this book before I give you the title of the book. If you could imagine, raise your hand, type in yes in the chat if you know a trading decision is something you should make. So in other words, buy the stock, it gave you the signal, or don't move your stop loss, leave it there, or you should add stock to this because that's what you game plan. But for some reason, you wait and you talk yourself out of what you believe is the right decision. Type in yes if that's actually something that you do, because I've done that in the past. I've now worked on myself, all the psychology books back there. You do not want to hesitate. You need to make decisions quickly, and this book 100% will help with that. So here's the book. Let me see. I'm trying to get it without the light right there. The 5-Second Rule by Mel Robbins. That's this book. This book teaches you a process for making a decision before that 5 seconds within your brain rationalizes a different emotional decision, which we all know that we've done that in trading. This book helped me out quite a bit. So I'll put that up there so maybe you could actually see it a little bit more detail. Worth every penny. And by the way, we had a conversation in our Discord community this morning about somebody talking about how much a trading book costs. Now, here's the conversation that I want to run through your head. And I want to ask you, are you thinking about your trading career, your trading skills in the right mindset? Now, the book was a little bit expensive, probably around $40, maybe a little bit more than that. So the conversation that was going back and forth was about how much the book cost. No disrespect to anybody. And I know one of the people on the call right now, so I want to say no disrespect to anybody right now. But winners, high achievers, people who are interested and willing to invest in themselves do not focus on the cost of that trading book. The very first thing that goes through their mind is, what is the ROI? If I buy that book for $40, how fast can the information in this book get me back that $40 and now become a part of my trader's toolbox where I can make multiples and multiples and multiples over that $40 cost of that book? People who achieve at the highest levels invest in getting their time back. If you spend that $40 on that trading book, whether it's one of the best trading books of all time, I happen to have the book that we're discussing. I think it's an amazing book, but this is more about you. I'm talking to you right now. Winners, achievers at the highest levels of anything pay to get their time back and pay to shortcut the learning curve. So you need to ask yourself, Am I willing to have all of this trial and error, or would I invest the $40 in that trading book, get one idea that can dramatically change something you're doing wrong right now, or level you up to a different place where probably in the first week you can get 10 times the cost of that $40 trading book? Stop thinking about what it costs. Get your time back. People who are up here that achieve massive, massive success, the most valuable asset is time. When you make an investment in yourself, you are buying time back. You are not spending money on a book. You are investing in advancing what you're doing right now. Look, everybody's got their own, budget for what they want to spend. That's not the point. I'm not saying $40 is a lot of money. I'm not saying it's a little amount of money. It could be a $7 ebook. It doesn't make a difference. If you look at what's in it and you believe that you can get immediate ROI based on what they're promising in that book, it's a no-brainer. And you should not be buying on cost. You should be making that investment in your stock market skills based on what you can get out of it. You can take that to the bank. If you are spending time getting as much free stuff as you possibly can, and you're not getting results, I'm telling you straight up, you are getting what you're paying for. So you need to make a decision on how fast you want to level up. Now, not all of the stuff out there is the same quality. You have to make a decision. Are you making a good decision based on what you're getting? The book that they were talking about this morning, very, very good book. It was a really, really good book. If you happen to know Larry Williams, it was one of Larry Williams' book, who I've actually learned a lot from myself. So it's exactly, Stephen, it's about value. And I know Stephen knows this because Stephen's an entrepreneur like myself. He understands that when you're running a business, you can't run a business with no expense. This is why they have franchises. Franchises, you're paying for the roadmap of what works to run that business. So if you buy this book, if you buy a trading book, if you buy a trading course, whatever, you decide to invest in yourself, winners think about the ROI, and they're buying their time back. You are not spending money. You are investing money to level up your skills to get your time back. If you learn anything from me, if you learn nothing else, high achievers value time the most. That's a fact. And I'd love to see you become a high achiever. Again, whether it's about that Larry Williams book, whether it's about this book or any other investment you make, take it to the bank. When you make that investment, the first thing that should be going through your head is, will this get immediate ROI? I've spent $25,000 on coaching programs, and I did it in a heartbeat because the ROI in my mind was, wow, one thing can change everything. That's the thought process that you need to have in the back of your mind. So we're going to work our way over into it. Hopefully, if you didn't get the, if you didn't happen to get the screener, I'm going to post this in here again, just in case you happen to have missed that. That's the double normal volume screener. Now, it's going to be different right now as we're approaching the market. You want to run that scanner after the market closes. Usually wait like a half an hour so all the final data is in there, and you'll start to see, am I spotting reversals on heavy volume on one candle? Am I seeing what we call exhaustion? Am I seeing accumulation? You got to start to jot those down, and you'll be super happy that you learned to do tape reading and put those pieces together. So that's one part of what we're going to discuss today. The other part, obviously, we discussed why Square stock rallied, because we saw that reversal. We saw the exhaustion. So this was the first day, this heavy volume leading to that. Okay, so it wasn't shocking. So if you were in our Discord channel, I'm not talking about this after the fact. We basically all last week, we were talking about where we were buying Square and getting involved. But here's the thing. We had it in our watch list prior to last week. That's the biggest point I want to talk about. The link to the video I'm talking about, go down into the description after this and watch the video on Square, SQ stock, and the rare buying pattern that we talked about. And you get a lot more detail about what we just talked about. Now, the big thing to talk about today is the rotation into some other areas. And this is what we're talking about, whether or not, so this is Friday's price action. And you can see one of the things I think that's the most exciting is the expansion in the large cap stocks participating. So again, if you've never been to finviz.com, I'll actually post this video, this link in here for you as well. The size of the box, so I just posted in there, the size of the box in the FinViz map that we're looking at is the size of the market cap. So again, when you're doing your game planning, this is one of the things that excited me the most about this. I sat up in my seat and I said, wow, large cap stocks are participating in the rally last week. So I want to point out what that means. And you can see the size of the boxes here. Apple, this is all refreshing now because we're getting closer to the open. So all that data is changing. If we go out to the last week, you can see how large cap Microsoft, Apple, Google, Amazon, all catching a bid. Now, the big thing from last week as well is here, energy stocks. So energy stocks have been some of the stronger stocks on the board, obviously with the unfortunate situation that's going on between Russia and the Ukraine. So that spiked, inflation's going up. We were trading energy stocks pretty aggressively until they paused last week. So let's talk about what that looks like here. And specifically, we'll go out to the ETF. So the Xlv, we were trading pretty aggressively here before that happened, and then trading it pretty aggressively here. But now we pulled back pretty reasonably. We pulled back perfectly to the breakout level. Now, here's another thing I want to point out. Remember, we started today's Stock Market Live talking about keep it simple, keep it repeatable. That's where stock trading success ultimately comes from, because you're mastering something in particular. Xlv, the ETF for the energy sector, broke out, pulled back, and held support at exactly the spot it broke out from. I just want to pull that up again for you really quick there. Right there. This is the breakout, and look at this perfectly pulling back and holding the bid. So last week, again, this is a part of sector rotation, which is a big part of what I teach in our community, is tracking, piggybacking, and stacking the order flow and in and out of different sectors. So part of last week, we were trading solar stocks. Then we shifted over into electric vehicle charging stocks. We stayed away from energy stocks because they just weren't in play. We rotated into other things, which again, getting back into the large cap tech stocks. That means last week, as we just looked at on the map, the energy stocks were not in play. And you can see that here. Again, this is the 5-day performance, but the large cap tech stocks, as well as the financial stocks and healthcare stocks. So what are we looking at going into this week? What is the mindset? What's the game plan? How are we scripting out what the community is looking for this week? Healthcare stocks were very strong for the last couple of weeks. And you can see that on the Xlv Healthcare Etf. So again, that's this pocket of opportunity that we're looking at over here. So if we go to the Xlv, you can see that we finally had a nice reversal, finally got out of this box, which again, if we start to draw these, hopefully you're doing this now and you're starting to recognize when a stock is just sitting in a window and that's the right price. And you don't want to trade when there's nothing going on. You want to trade when something is happening. Now, healthcare perked up last week, maybe a little bit beyond the optimal entry. So we're going to probably wait for healthcare to pause a little bit. Also, if you remember early last week, we discussed when energy stocks and the energy markets, oil futures go down, generally speaking, we see a move to the other direction in airline stocks and cruise line stocks. And we'll start to see the get out of the house stuff start to rally. And that was the game plan that we had for the best stocks to buy last week. This week, we're going to be looking for those stocks to pause a little bit, and heading into today, they're still in the tracking journal, which is the healthcare stocks, the financial stocks, the airline stocks. Those are stocks that traded really strong last week based on what we just talked about. So energy went down, which you can see here, went down and paused. And then we talked about the airline stocks catching a bid. We talked about the financial stocks catching a bid with the interest rates pulling back. So now the decision we're making this week, waiting for energy stocks to catch a bid again. They pulled back, paused, held that breakout. So I'm looking to be a buyer of energy stocks this week for swing trades. I am looking for the healthcare stocks, which had a really strong rally last week, for the next pause. So energy stocks paused last week. I'm looking to be involved in them this week. Healthcare stocks had a very strong rally last week. I'm waiting for the pause. So the push, we make the money. The pause is what we manage risk before the next push. So I might need to wait maybe Monday or Tuesday before I get the next optimal entry into healthcare stocks. Financial stocks, and quite frankly, a lot of tech stocks that rallied last week, most of them are in longer-term bearish order flow. So we have bearish order flow, which is the dominant pressure right now. versus the bullish momentum of the last 4 days, basically Tuesday through Friday last week. And we just showed you that in JP Morgan, where you have this bearish order flow going back several months, but the last week of buying pressure. So what is the right trade right now? What is the right trade? Hang on just 1 second. I have to kick somebody out. So what is the right trade right now? Well, as I said to our community this morning, game planning for today was a little bit more challenging because we had what we call conflict. So we have to be very particular about the best stocks to buy now, which means that we're looking at some stocks that have already pushed and paused. Those will be the ones that I'm going to be looking for, or getting back to the double normal volume scans, looking for stocks that had increases in volume that broke out of trading ranges, which we call those stocks fuel. So here's the point that I want to get across. We talked about SQ stock and block. It had that $50 rally. Now I'm looking for SQ to pause. So it's a little bit beyond what I would call the optimal entry. So if this is what it normally does and we could justify that risk, fine. If I buy it here, the reward potential is aces. It makes sense. But if this is what it normally does and it just did that in the last 4 days, it's pretty far from the optimal entry. Now, maybe it can go one more day. Maybe I'll day trade it one more day and still catch what we call the bullish echo. But for me to put on a new swing trade in that stock, in that particular stock, or even PayPal, which actually had a pretty hard rally last week as well, I'm probably going to wait for the next pause. And you can really get a really good clean picture of PayPal and see how much we've been working it. You can see that it rallied hard last week, maybe got out of this box finally, and you can draw this box so it's pretty clear. Maybe it got out of there. Maybe you can justify a first piece. But here's the thing, and actually nice volume, as we said on Friday. This is the part that I want to leave you with here today, okay? The rally that we had last week, you're going to see a lot of stocks with expanded volume. If you see those stocks, as we said, which most of them have bearish order flow, but bullish momentum, if you believe, again, I'm going to point this out here in PayPal stock, if you believe that it got out of this box and now it's starting a new move back in the other direction, if you choose to say, I believe a new move has started, a first reversal means first position size. So go back to what we just talked about before. A smart money concept is the deep pockets. The smart money builds positions. So if they are building position looking for the big reversal, that means if it's the first time it's reversing, we would be doing the smart thing, which is going in there and putting on the first piece of a new trade, which is different. And I'll pull up 2 different stocks so you have a very good visual of this. This reversal in this context would be a first initial position size versus something like this and looking to be a buyer, let's say here, where we already have validation of the order flow, both from simple moving averages as well as from 1 week to the next. We're seeing pushes and pauses, a very, very different conviction level when it's already moving in our direction, where we can now piggyback the smart money and just look for a spot to buy because they're already paying higher prices. Remember, the easier trade setups that we have, the more conviction that we can have is when it's already doing what we expect. The smart money is already paying higher prices from 1 day to the next, 1 week to the next. Then we're just piggybacking what they're doing. If it's the first time it's reversing, then we should do the same thing, which is go in with a small piece looking for validation. And what is that next validation? The push and the pause. So if this is the first push and you put on your first piece, during the next push and pause, during that pause is where we're looking for feedback. Is this short covering or is this fresh buying? Short covering will go right back down. Fresh buying keeps it sideways. That means that they're holding the bid. So we're kind of mapping out the entire week. But here's the main thing that I want to get across to you before you head into the stock market today. We're at a reversal point. We're at a little bit of a tricky spot right now where it's clearly long-term bearish going back to the end of December of 2021, short-term bullish. This is that moment in time where you're kind of right on the precipice. Do we rocket higher and continue going after the next pause? Or do we start to head back down and the inflation conversation comes back into the equation? So for me, that translates into I'm looking to be a buyer of the continuation of the energy stocks. Everything else for me, including those large cap tech stocks and maybe even financials, those are shorter term trades for me right now because they're not exhibiting longer term bullish order flow. They just reversed last week. So what's the point? The point is manage your money properly, especially today. Do not have fear of missing out because of the volatility. It's up to you to put on trades that have a high likelihood of following through. So myself personally, I'm going to kind of tiptoe into Monday with, again, I have my whole game plan scripted out, but I'm going to keep my initial position size a little bit smaller, book some trades for cash flow, and then look to size up if we continue to get follow through. So that's my game plan for the week. So I want to thank you so much for joining me here on today's Stock Market Live. We talked about SQ, block stock, gave a big detailed analysis on how volume completely changed the picture of what we were looking at. If you find these videos helpful, please do me a favor. Make sure you hit that subscribe button, smash that like button. If you have follow-up comments, leave a question below the video. And if you want to watch that video I talked about, how we talked about SQ accumulation, that video is also in the description below. Go out there and make it an awesome, awesome week. I look forward to talking to you again tomorrow. Thank you so much, everybody.